Hello and welcome back to Digital Assets Daily. Good morning, good afternoon, and good evening, wherever you are in your corner of the world. Today we're going to dive right into a few articles. Bitcoin isn't down because of China. It's down because you don't need it. Crypto markets are not reeling this week because China is cracking down on blockchain. Tokens have been getting slammed since the summer because most of them are unnecessary, and because the need for coins that may offer some utility is not as imminent as buyers thought it would be. This is most obvious with King Crypto, Bitcoin, whose purported use case as a store of value is not looking very compelling. The risk reward in Bitcoin has always been an extreme one, which is why its biggest proponents, salespeople, assigned astronomical price targets to it. Widespread adoption is an extremely low profitability event with an enormous payoff if the stars align. And let's be clear, the things that need to happen for the world to turn to Bitcoin: complete central bank impotence, widespread currency debasement, falling equity markets, and the abandonment of traditional gold. Means betting on Bitcoin is essentially betting against the house. Hence the short bankers long Bitcoin meme. To say Bitcoin will offer a 100-time return, yet also say it's a highly probabilistic event is inherently contradictory and hugely dishonest. The market is now realizing this as the global economic slowdown of the last 9 months shows signs of stabilization, and the Federal Reserve sees no need for more interest rate cuts. The case for Bitcoin is taking body blows. None of the stories about adoption are turning out. Big tech giants from Facebook to Google are doing everything possible to dominate electronic pay and finance. And projects designed to make Bitcoin a means of exchange are either slow, fruitless, or both. In short, the house does not look like it's in a losing position just yet, and so Bitcoin is getting killed. Sure, the US and China could have a major fallout, get into a currency war, and Chinese citizens could rush to crypto as a way to get money out of the system. That's why Bitcoin will never be worthless, and why every investor should watch its price action. But that scenario is looking way further away from reality than the crypto knights had so many believe. Bitcoin's violent moves are a factor of the speculative nature described above because its probability of success is low. It is closer to a roulette wheel than any traditional asset class. Average people were lured into the Bitcoin sales pitch in 2017 when the economy was tearing hot. Cash flow was heavy, stocks were churning out huge gains, and people could afford to take a gamble. Why not roll the dice? Now those buyers are losing faith in their chances of winning and are using this year's rally to get out. As the fundamental reason for owning Bitcoin as a store of value also loses luster, amid a stabilizing economic situation, the true believers may start bailing out too. If it continues, it should be a warning sign to more traditional investors who made a similar bet in gold, and maybe even those who ran to treasury bonds as a hedge against chaos too. And then the Yale Environment Review. It doesn't just stop there. They keep on coming. How can we reduce Bitcoin pollution? The current design of Bitcoin's system requires more electricity than is needed to power Denmark. Given its expanding condition, the rise of Bitcoin mining may pose a threat to the environment. Recent research explores how to promote the environmentally sustainable applications of blockchain while not hindering the industry's growth, and funds that international cooperation is the key to reducing the colossal energy use of the cryptocurrency. As there is more, I'm not going to continue with that. I don't want to bash any further. But obviously the links, as always, will be included in the description below. We're going to finish off this segment with how Ripple is taking over the US. Give this a moment, let you see the price current at this time. Scrolling across the screen. You have your Bitcoin, your Ethereum, your EOS, and XRP at a 0.231418 at the time of this recording. And I guess this is information coming from CoinGecko. Okay, let's go back to how Ripple is taking over the US. XRP was only second to Bitcoin in terms of US search last year. Ripple is still a long way behind Bitcoin, though. According to a Google Trends last year, the number of United States users that searched for the term how to buy Ripple was a lot more than the number of people that were asking how to buy Bitcoin. The main thing that this shows us is that Ripple is gaining a lot more traction than we previously thought when it comes to mainstream adoption. Even so, Google users interested in cryptocurrency from outside the US searched more frequently for information in regards taking up a position in the current #1 digital asset by market capitalization than they did for buying XRP. With all this in mind, the term Bitcoin outperformed XRP on both a global scale and in the US, so maybe the long-awaited flippening that XRP enthusiasts are looking forward to might have to wait for a little bit longer. So it seems that it's only a matter of time before the famous payment protocol replaces Bitcoin and becomes the leading digital asset by market cap. Granted, this might be a bit of a stretch for those who are part of the dedicated community for XRP. They have been denouncing Bitcoin as an outdated technology. For the Ripple community, Bitcoin is old and weary when you compare its rivals. Based on the potentially increased utility, many more transactions per second provide. Large numbers of folks are banking on XRP, one day outperforming Bitcoin in terms of market cap. Even though XRP is a somewhat controversial currency, it is still a long way behind Bitcoin in terms of total size of market. There is one factor that Ripple seems to be outperforming BTC on, though, and that is Google. A former engineer at Coinbase, Preeti Kesareddy, took to Twitter to highlight some of the Google trends of 2018. Although this is misleading since this is only based on users in the US and not the whole world. So we'll finish off with that. And in Bitcoin's defense, Bitcoin did run semi-recent its fastest ever time ever running on XRP. Oh, my apologies. But it's a great day and I hope you're having a good one. This is not financial advice. Remember, it's your hard-earned dollar, your hard-earned time, and your hard-earned labor that is providing you with currency to provide for yourself and your family. So do your own research and be careful, be cautious. If you do invest, invest wisely and never more than you can afford to lose. And it's not so much that the double-sided meaning to that statement is it's not so much that your investment may crumble and fall apart down to nothing, but it also has a second meaning that you're not stressed out and you no longer have to think about that money. And that's what it means, invest what you can afford to lose. Basically, I would rephrase that to invest what you don't have to think about. Because if money is tight and you overinvest, now you're going to have to sell some of that investment to get your money back. And that is a very stressful thing that you should not have to face or think about and worry about, as life itself is enough of a challenge. So be very cautious, be very careful. And here, obviously, we love you. We thank you. We're going on about our 6th or 7th week. And you guys have been absolutely amazing and very supportive. It is much, much appreciated from me to you. I'm grateful and appreciative to have you here with me daily. And I will continue to add more information so that you don't have to do your own research. You can come here and I'm doing it for you. Again, I'm hoping you're having the best of days. And I'm going to finish up my coffee and get ready for another edition for you. Till the next one.